Good day, traders. Gold has fallen from 2000 something all the way down to 1915 and then back up to 1950. And it looks like it's turning to go up because it got down and did not make a new low. This was the low back here on July the 2nd. And that low was 1911. I think they made a very significant weapon in 1911. I think it was the Colt 45. Still being used today, manufactured today. But it was designed way back before World War I. Now remember that. I told that story so you can remember what the low was, recent low, almost 1900, but it was 1911. Low is 1911. So we've got to get rid of some of this old stuff that it was good when the candles were over there, but of little use now, except to clutter up our page so we can't see the candles as good. Because our objective is to trade the candles, so we have to see the candles to trade them. So we're going to spread this out some more. And I don't need the word success in there. I don't know if we had success last week or not. This is not comparison of actual versus forecast. This is simply forecasting into next week. And we'll just use the actual versus forecast that we have up on the website for another week, because that's some busy work that needs to be done about twice a month, but not every cotton picking week. Especially last week. I don't really know how our forecast came out last week, but I know my trading record was dismal. So it must have not been very good. I don't know. And I'm not going to find out. I don't care. What I care about is getting it right next month or next week. Excuse me. So now we need some vertical lines. We always need these vertical lines because they help us get a handle on what we're looking into, what we're looking back, our present situation, and where we're looking to go. We're only looking to drive about 100 miles. In other words, we're only going for a short trip into next week, Friday, not into the following week, just into next week. So I'm believing that we've either got a buy going here, or we're going to sell some more. So let's look at both eventualities here, just as a kind of a training exercise. Let me get rid of that fib there that's old. And now we're going to look at this could happen. I don't think it will, but it could. So we could go down to here, up to there. Well, yeah, this is what I expect to happen. I expect to happen. This could happen. I don't expect it to happen, but it could happen. We could get down to 1850 from 1950. That's 1,000 points. I guess 100 points. How many thousands of dollars is that? Quite a bit. So let's come back and we'll get rid of that. And now I see what we've got here, another opportunity. Let's align these things. Let's put these, let's change this pivot to the weekly pivot like we did before on crude oil. That's important to do. So we're going to go into indicators. We're going to go to pivots. We're going to change from daily to weekly, because that was a policy change last week. I think it was Justin's idea. You know, you could change that pivot to weekly, Richard. I didn't, but he told us, he shared some wisdom with us, and I'm going to use that wisdom to help us better understand the financial markets. And we've got an ABC from this low up to that high, So I'm going to draw that in so you can see that they tried to get it up. And they made some progress. They made a lot of progress over these last 2 days of the week. So we went up to here and went down to there. And then there's another one here that's kind of still working, I think. But so we go up to A, B, C, D. And that's all we got. It probably should be, that's only 20, it's 32%. It's already done the pullback down to 38.2. So it's ready to go on up to 1970. That's not much. Okay, that's not much at all, but it's enough it's enough inference that gold may be ready to buy. We can buy it inside of this closing candle. So we're going to draw a little box around that range that we could buy that gold. And if we go below that low there, or even below this low, we will want to what? Get out of Dodge. So now we're going to adjust all these horizontal lines. Put one on each one of the levels. Here's the pivot. That's where the money spent the most time last week. On that pivot area, here's resistance 1. Here's resistance 2 and resistance 3. We're going to buy it right here. And we're going to stop it right here, relative stick. Excuse me. We're going to stop it down here at the pivot. We're going to enter up here on resistance 1 where it closed. It closed up there, but somewhere in here we're going to buy it. So we're going to stop it here. Maybe we better stop it here. My money will stop it here. But that's where we're going to get in. We're going to get a little higher than that because it closed way up there. We don't know where we're going to get in exactly, but we're going to get in somewhere in the middle of that candle. When we see a setup, an A, B, C, D to the upside setup is what we want on a 15-minute chart. So let's make this a little bigger and spread it out a little bit more and get our targets over here and stick them here. Now we are not expecting to get price up to 3, but it could go up there. But we don't have an ABC to D to indicate that, not on this time frame. Now we need some vertical bars, so let's put those in. We want one over here on September 2nd. So we want to spread this out to where we can see. Oh, it's September 1st. Remember, that's Friday of next week. There's 256 on that Friday. Okay, now we want one over here. And we want it. We didn't have to go clear over here to get it to be around 2 o'clock. Oh, I know. We haven't fixed that. Go to data series, and you come down here and set trading yards properly. And it's this use instrument setting, okay? So I'm going to go down here and put it on US Index Futures ETH. Now we bring it back and we see if this is right here on, that's just a little bit off. It should be below 3 o'clock. That's when it closes in California. That right there at 150, as close as I can get. And then the prior week, was August 18th. At 245. No, I can go down here. Now this stop zone, entry zone, it looks a lot easier to see than it was earlier when we had it squinched up so much. Well, that last candle of the day had a lot of buyers in it. They were pushing it up. They're ready to go forward. We're going to put a target 1 there. Then a target 2 up here at R. At resistance 2, we're going to have target 2. And up here a little bit below resistance 3, which is too far up to show. We're overbought already. This may want to come down to somewhere in here before it goes up. Okay, so now we're going to take a picture. Save chart image. And we put our charts on a Google Drive so the people that participate in our business can visualize them. They're also up on our website, which I want to show now. If I can just find it. It's called Swiss FT. And you might wind up going to Swiss FT homepage. And if you do that, you come in here and click on trade alerts and go to weekly forecast. And that's where you get our trade ideas. And here's last week's trade ideas. We had 5 of them. So now I'm going to type in this nomenclature. F-O-R-A-C-A-S-T. And of course, we always provide targets to give people a sense of where price could go. We don't know if it will go there. We don't guarantee our work, but we do kind of know what we're doing. And all anybody can do in this trading business is guess at what's going to happen. That's what the weatherman does. That's what your doctor does. When he diagnoses you, he guesses that you probably have an appendicitis. And he knows it within probably 3% of probability. He's 97% right, but when he cuts your little gut open there to find it, it might not be your appendix that's giving him the problem after all. He's practicing. We're practicing. Your doctor's 50, 70 years old, has been practicing ever since he got his medical license. He's practicing to get better and better and better with diagnosis. So are we. It's no different. Lawyers don't know for sure they're going to win a case when they go in the courtroom. They don't. The prosecutor doesn't know she or he's going to win, and neither does the defense attorney. They're practicing. We are practicing, just like lawyers and doctors. Don't let anybody tell you that you can't read the mind of the market. You can't precisely read the mind of the market, but you can figure out what the market has on its mind and follow its migration toward the destination that we're suggesting it could get to up there at 1970. 1970 was 50 years ago, or 60 years ago. Let's see, 1970, 30 years last decade and 20 years this decade, 25 years ago. All right, so now I'm going to put the gold label right there. I've got my entry zone. I got to put the stop probably down here. We go below this 1939. We're going downtown, so let's get the hell out of Dodge. So now we're going to take a picture on gold. Didn't take us long. Okay, let's see if I can find that picture taker. Save chart image. You have to put your pointer just to the left of the period. Okay, WRAFORECAST and targets. And of course, we've got our targets. And tomorrow, when we do our follow-up, we'll enter these targets into an Excel spreadsheets and then into our automated strategy that was developed for us by another colleague over the past 3 or 4 months. And it got us something to look at about 2 weeks ago. We've been analyzing it very closely and testing it. And we're going to be ready to use it probably a week after next. We're going to test it some more this coming week. And it's really cool the way it works. It works just like our Excel spreadsheet. You've got to enter data, not in the Excel spreadsheet, but in the program, in a strategy. And then it will trade that strategy for you every day during that week. I think it's just beautiful. And it will trade both directions. So if it finds a fractal high, like here's a fractal high, this needs to be up here on that. I think that's the high. No, this is the high. So I need to go up here and turn that snap mode on and snap right on that high. And this needs to be snapped on that low. And this needs to be snapped on that low. We don't need that. So we kind of needed that when we first started, before we realized that this was the main daddy. And so now we've got to kind of adjust that onto the right of that. But that snap function doesn't need to be on to do those adjustments. So I can put it right up against that line and then put this over that line. So now we'll make another picture. Since we've already got a picture, all we have to do is go into it and find the picture for the gold. It's gold, right? And it tells us, do you want to replace it? Yes, I do. Okay, now we can go look at the S&P. Get rid of that word fail. That was 2 or 3 weeks ago. All right, now we have come down. So we've been changing these pivots from daily to weekly. So let's do that first. It's kind of a foundational policy change. Change it from daily to weekly. Got an awful lot of lines in here. That primary pivot. Then I'm going to erase 5 or 6 lines here. I only need 7. I hate to add one back. So okay, 1, 2, 3, 4, 5, 6, 7. We can delete these. Let's go over here and get our stuff, our equipment. So all this is kind of a show. I'm showing you how to figure out what the market may do next week. And I've got these candlesticks in prior history to help me with that. So I'm seeing this S&P, well, it got really weak for about 2 weeks. I don't know, 2 or 3 weeks. Let's see. Let's draw some vertical lines on here. So we're going to draw a vertical line right here at the close. And then we're going to spread it out a little bit. And then we're going to draw another vertical line over here at the end of next week, which happens to be September 1st, just like it was on the last instrument that we did. And that's over here. Now, if we click on that line with our mouse wheel, we can see that the date is 8/24. That says it's September 1st. I don't understand that. Oh, I bet I do. You got to right click. You got to go in. Sometimes you have to right click 8 or 9 times to get what you want. Here it is. You come down here and you go into data series. And remember, we have to choose the correct trading hours. They're not always, they don't default to that, what you want. I wish I could figure out how to get them to default to CME. US Index Futures ETH. And once I hit apply and OK, then we'll have a little bit more reliable information. And then this should be on September 1, but we've got to move it over there to September 1. And it's not. No, it's not quite right, but okay. And today is the 20, get the date, 6th. That's right over. And that says the 24th. This gives me a headache. Back when we were using NinjaTrader 7 last year, we could align these vertical lines and get right on 2 o'clock in the afternoon on Friday. It'd be perfect. And then we could drag it across into the future and find 2 o'clock in the afternoon a week from now on Friday. It would be easy, but this is hard. And this is the most important futures instrument that we have to deal with. Why is that? Well, we have to understand that these futures control our savings accounts. And when you get to be retirement age, you start thinking about how much money you have. Will you have enough money to live the rest of your life without working anymore? And one of the reasons you would be interested in the trading futures is to earn enough money that, in addition to your salary and what you do normally, to retire with a little bit of money over and above whatever Social Security you've managed to accumulate. We can't rely on the government to take care of us. That's what the communists do. We're capitalists. We're conservative planners. All right, so we've been going down. So we need a couple more vertical weeks here. I'm going to stick them in, and then I'm going to find their rightful place. So again, I'll use our calendar. It's a little bit too big. I'm going to make it a little smaller. That beginning again, lost it. So we've got um, 2 weeks back, 1 week forward. These are not right though. You've got to find the Monday. I mean the Friday. So this Friday was the 25th. So this should be the 25th. It says 24. That irritates me. And this Friday was the 18th. And then the third Friday back was the 18th. I guess it was the 11th. This is so screwy. Give me a headache. What are we looking at here? I believe we're going up, and we've got a ABCD to prove it. Now, you probably, I know Justin's probably seen this already 15 minutes ago, and saying, when is he going to get to the point? So this is what we're expecting. However, we got that. So what do I expect next? Well, let's put a fib on it. Move it all up here so we can see it pretty good. To the bottom and top. So we're going to come down to the 38.2, and I drew that backward. I do it from the bottom. I draw it from the top down. We'll call this the top. Now this could happen, but I don't want it to, and I don't think it will happen. But we're going to draw the fib from up here to down here. And then we're going to expect twice to come back to the 38.2, which is right there. I want to draw another line. What to our attention, the 32. So this has got to come down to, I think I drew it wrong. I want to draw the fib from this wall up to that high. Right at the 38.2 here, not down like that either. What do you think, Justin? What's this thing going to do? I guess
I think we're going back downtown. You want to draw the fib from the very top one, that little doji up there on the left on July 27th. That's where you started, and you ended at your 8 point down. It's probably right at yeah, just a little over the 50. I think we're going back down.
So we're already up there to the 45%. So now it's going to pull back to the 32 right here. What happened? So we'll want to buy it right here in the 32. 38.2. We can find our tools. But we let it pull back bottom 38.2 level. And we're going to have a stop down here. I don't mean the word initial. Now, when we put this in, this doesn't mean you quit. It just means you exit because it's taking your money, and then you look for another entry. Set up signal to trigger an entry. We're not taking much. I don't expect it to do a lot. Pretty right around the primary pivot. We're headed up to resistance 1. Where's resistance 1? Right here. I'm going to enter. This needs to be over here. We've almost gotten down to the 38.2. So we're gonna actually enter at the 38.2. Where's my target 1? Here. I think it's going to go up higher than that ABCD. Let me use my arrow here. Indicate that. And the fudge over here. So we'll take profit here at the 50 and the 61, and up here between the 61 and the 78. And if we go down to, we need a stop in here. We're getting in right there. We need a stop down here around the 44.40. We're going to get in around the 44.60, 44.58, and we're going to go up to the 44.87, the 45.20, and the 45.40. Should be way over here on August 18th. And then August 11th is right about here. Step through that. Let's do this euro here. Step one. I'm going to stop the recording and make a third one.